It's been a week of uncertainty, to say the least. So in moments like this, we turn to two veteran money managers to make some sense of what has been an amazing ride. I can see Jack Bogle laughing already. Jack Bogle, founder and former CEO of the Vanguard Group. Ken Heebner, portfolio manager for Capital Growth Management. I think both joining us from New England. Gentlemen, good to see you both.
Good morning.
Thoughts, Jack? Where do you begin, and what do you tell people who are trying to understand what the American banking system is today?
Well, and the reason I smile a little bit at the beginning is you asked me to make some sense of all of this, and I'm not sure I can.
Yeah.
I mean, I've never seen such pandemonium in the markets. I've only been in the business for 57 years. I've seen 10 bear markets. I've never seen anything like this. I've never seen such an inadequate response from the regulatory authorities and the government. It's like put a tourniquet on here, put a Band-Aid on there, and every time they nail something down over on the right, something pops up over on the left. This short sale thing strikes me as, I'm not an expert in all that, but strikes me as bordering on almost insanity to try and do something like that. I don't know if they don't know exactly how the markets are working. There's interference where there shouldn't be, and probably not interference where there should be. But I would tell somebody, look, American business is American business, and these are not. What's going on here has nothing to do with investing. It has everything to do with speculation. It has everything to do with markets. It has everything to do with black swans. And just try and ignore your way through it. This too shall pass away.
Right. But, Jack, I understand the idea of not trying to speculate in these markets, but for even long-term investors now, I think there's a question about how you value markets or how you count on any kind of appreciation when you've got so much big-time uncertainty from entities as powerful as the federal government.
Well, you're right. Although the federal government is not as powerful as the economy, I mean, this is, I think, roughly a $14 trillion economy. And I just say this. Look, from these earnings levels, and of course my argument isn't helped out much by the fact that nobody knows exactly what the earnings levels are today for the S&P 500, say, with this chaos in the financial services particularly. But at these earnings levels, I don't see any reason from here that earnings won't grow roughly even faster than our economy. Let's call it a nominal rate of, in a 5% economy, maybe earnings can grow at, say, 7. That means if you're a long-term investor, and a decade really in the very long term, earnings will double in the next 10 years. I mean, I don't think that's ridiculous. That's the kind of thing investors should be looking at. I mean, think about it this way. The market has swung up and down, valuing American business at $1 trillion more one day and $1 trillion less the next day. That's what the markets are saying. Anybody that thinks American business goes up and down in its cash flow and intrinsic value $1 trillion a day ought to have their head examined. So I think we're letting the market take over our good sense.
Ken, there are a lot of people who are watching from home who are investors, but maybe investors who don't pay a whole lot of attention on a day-to-day basis. This week, the Dow Jones Industrial Average in the first 4 days of trading moved over 1,500 points. You add what the market move is setting up to be today, and you could be talking about close to 2,000 points. That's never happened. What do you say to people who are watching at home who are worried about not only their stocks but their money markets? What's the message?
I think the percentage moves in this market are not outsized relative to what we've seen surrounding other market lows. I think we had a major market low here because the global economy is sliding into a recession, and I think that is a problem. But I think I think the government here has been brilliant. I think everything that's happened in the last 2 weeks should make everybody very confident about how alert and quick the government has been to react to this major problem. Now, you can debate individual parts of the action, but they're all guaranteed to provide confidence. And I think that you're going to see the financial sector. I think the U.S. economy led the world into the recession, and we're going to lead it out. And I think the early cycle stocks, the financials and the retailers, are going to be the leaders in the U.S. stock market going forward. Now, I can't predict what the market's going to do over the next 3 weeks or the next 6 months. But I think the leadership has been clearly established in the financials, and there's a tremendous opportunity in the bank stocks. The strong banks are going to gain hugely from the consolidation that's underway. And you're going to see margins in the banking business reach levels never reached before because there's basically a little bit of a shortage of lending capacity. That means the spreads are going to be at record levels. So I think our focus fund is over 30% in financial stocks. I mean, maybe they'll go up so much today in some kind of short squeeze I might have to sell some. But I'm very positive. And I think global financial leadership is what the United States has displayed. It's a real testimony to our country.
I'm really very much on the same page as Ken on this, but I'd like to ask Jack a question. Jack, I was watching an interview you did earlier in the week where you had talked about the problems that we've got in our markets today are really going to pour over into the economy. And if we're not in an official recession today, we will be down the road. Do you still feel that, or do you think what's just taken place actually helps that a little bit?
No, I think it's pretty clear that, probably you just have to look at the mortgage area. You have to look at the fact that consumers aren't going to be able to equitize their real estate as they did to build the economy in the late in the kind of mid 2001 to 2008 or 2007, equitizing their homes. I think people are feeling a lot of pressure from rising gas prices. They're down to be sure, but they're still high. So I think we're going to have a pretty serious set of economic circumstances that it's going to take a couple of years. This thing was years and years in building, and it's not going to be over today or tomorrow. I do think the stock market will probably be good. It usually is at anticipating that. So I wouldn't disregard Ken's comment that this might be toward a low point in the stock market. Yeah. We never know, as we both know.
Ken, separating the markets from the economy, if the economy's an athlete, right, who just tore their ACL or who was facing some career-ending injury, to what degree are they now going to heal? And I'm talking basically about housing. We may be getting money back in the markets and lending happening again, but does that mean we're going to soak up this inventory of homes, or are people going to move back into those homes?
Well, clearly, the deflation in the housing market, particularly in the bubble markets in California and Arizona and Florida, is going to continue. But, I think we've bottomed in a lot of the markets. The Case-Shiller numbers show that. And, in fact, I would bet you that I haven't seen any numbers on housing prices in Iowa or Minnesota, but they're probably up, reflecting the farm boom. So the consumer has to retrench here. But I think you've got to remember that a lot of people were not using the house as an ATM. A third of the people in this country don't have a mortgage. I think the vast majority of people are able to pay their mortgage. And once housing prices bottom, then I think the negative impact that the declining housing prices have on consumer psychology will be gone. There'll be a few states like California and Florida where it'll be a persistent problem. But people always underestimate the creativity of American business, the optimism of the American consumer, and I don't think things that have happened here are going to break the tendency for Americans' optimism to cause us to borrow and spend and lead our way out of this problem. I think the problem's been overstated. I think if the government hadn't taken all the actions it had taken, we could have broken confidence, but we haven't gone to that point. We've been very creative in solving what could have been a significant problem.
Right.
We were pretty close to breaking confidence, though, when you had the run on the money market funds.
We're seeing a lot of creativity this morning, I'll tell you that. Gentlemen, good to see you both. Thanks for the help. Jack,
okay,
Ken,
good
we'll
luck.
Talk to you later.